So you bag holding a couple of cash secure puts? Yeah, me too. I'm getting crushed. If you're doing the wheel and you have a cash secure put, it probably is not going great. It's not going great. So, in the words of Machine Gun Kelly, let's talk about it. Let's talk about how I'm handling all of the puts that I'm bag holding. Let's talk about how we roll options and how I'm still making money even though I'm bag holding. Let's talk about some reasons why I'm bag holding and also, how we're going to get out of it and / maybe recover. And I will give the long awaited update on the Peloton debacle from way back in November of last year when I made a video about how I was screwed then. People to this day still giving me price updates on Peloton. I'll show you exactly how much money I've made off of that first initial cash secure put that I got smacked on, that I eventually did get assigned on. I'll tell you where I got assigned. And hopefully at the end of this, maybe you won't feel so bad about your puts and you'll figure out some ways that you can make more money off the puts when doing the wheel. Before I start, guys, poll shows that not many people on my subscribers, over 50% of my subscribers don't know that I made a workbook. I made a workbook on the wheel strategy. You can get it on Amazon. It's cheap. You don't have to, but I guess I got to plug it more. If more than 50% of my subscribers didn't even know I had a workbook on all this stuff. First, why am I bag? We'll talk about Peloton, all right? It's my biggest bag hold. I'll make a video on all my open wheels and stuff, but my biggest one is definitely Peloton. Why am I bag holding Peloton? Well, first and foremost, greed. When Peloton first took its big smack back in November, I saw juicy premiums and I went for it, not thinking that over the next month, literally every day, it was going to drop 2%, 3%, $5 here, $10 here. It was an absolute disaster. And if I did not know how to do the things I'm going to tell you about in this video, if you did not know how to roll an option, I would have been down thousands and thousands of dollars. I'm still down a good amount. I'm chipping my way back out, but it would have been so much more if I did not know how to roll an option and get yourself out of a cash secure put that is just frankly just doing shitty. So here's a spreadsheet, guys, and I highly recommend for all of your wheels and everything like this, have a spreadsheet. However you want to make it, doesn't matter. The people in my Discord have access to all mine. If you want access to all my spreadsheets, just hop in the Discord. It's like a cup of coffee a month or something like that. But it started back on November 5th. The first one I made was a strike price of $54, expiration, and my premiums, and then my buy to closes. There's some things on this chart that I really want you to take notice of, and the reason why this is in red. And I made $127 before this got assigned. This was assigned on May 23rd when the price was at $13.62 for a strike of 40. The crazy thing is, I've made videos on why we never want to exercise options early because you will lose money. The value of the contract when this person assigned this to me or exercised on me, they would have made more money if they sold to close the option that they bought. Meaning they lost extrinsic value when they exercise this option. Guys, please do not exercise. If you buying options, if you buy options, don't exercise them early. The person that exercised this option lost money in that deal. They did pretty well, but they still lost money if they would have just sold to close. When we open options, guys, our goal is to close them, never get to expiration. And that goes for the wheel. You need to understand that. When you sell to open, that's what STO means. When you sell to open, your goal is to buy to close when you get to a certain profit that you like. I particularly like 70%. I'll lower that as the weeks go by. I will show you one of the covered calls I have on Peloton right now, and we can see exactly what percentage is that, and we'll work from there. So let's first talk about the things I want to draw to your attention and really why this thing was assigned. Even though it shouldn't have been, why was it? And why was I successfully able to roll 1, 2, 3, 4, 5, 6 times? I was able to roll this option for continued credit and still not get assigned, all right? And I was able to lower my strike. This is the beauty of rolling. Peloton was just, they were in free fall, guys. I couldn't keep up. It was falling so fast that I couldn't roll the options down fast enough, but I still got it down $14. That's $1,400 that I saved myself upon assignment. If I would have got assigned at 54, I would have paid $5,400 for those 100 shares. Instead, I paid 40. So that's the first great thing about rolling. You get to lower the strike on a call, on a put, and on the other way, you get to make the strike go up for a call. The other thing we can do is we can change expiration, give ourselves a little bit more time for things to work out in our favor. That 179 was a juicy. It was an outstanding premium at the time for Peloton. Greed is the reason that I'm bag holding Peloton. As we can see, it fell so fast, I needed to buy to close this for 532. Now, if you don't know what a roll is, it's a buy to close and then an immediate sell to open at a different strike and a different expiration, hopefully at a credit. So that's what I want to show you. I paid 532 right here, but I immediately sold to open at a lower strike price, 50 cents lower or $50 upon assignment, but I received a credit a week out more in expiration for 537. So the net of this roll was $5. So now my current position was 179 plus that $5. Now, when was I going to roll this? You generally want to roll on a down day because that's going to be higher premiums. So to get this credit, you're going to want to be doing this on red days. Now, every day was red for Peloton, but sometimes you might have to wait a day or so. And that's exactly what I did. Every single time I saw an opportunity to either shoot out expiration even further or lower my strike, I did so. For the second roll, that was a change in expiration, not strike. I bought to close for $465. That was great, a 72 net. And then I immediately opened again for $490. So I made a $25 credit on this roll. So I had 179, then I made another 5, then I made another 25. So as I'm rolling, I'm just adding premiums and helping my position by either pushing out expiration, lowering my strike, or both. But then things got a little bit dicey, guys, and you're not always going to be able to roll for a credit. But sometimes it is worth rolling at a loss to really better your situation. The first time that really happened was my buy to close for 882, and I was only able to open for 779. I did lower my strike by $1.50, so that was a $150 change in strike. So that's kind of how I justified to myself. I'm losing $100, but I'm really gaining. I knew I was going to get assigned eventually. So I was like, all right, I'm going to get that $150 back upon assignment. So that was really better. It was much better than letting this thing expire in the money and getting assigned at 52. So you're not always going to be able to roll for a credit. You're just going to try. And that was really a big hit. It set me back a little bit. But what also started to happen here with this loss, and the reason why this premium was less, this was November 24th. I made that option and I made the expiration for 12/10. So as we can see, as I went down, the difference between the transaction date and the expiration date, they got a lot bigger. And when I finally got assigned, like December, I made this one for March. 3 months. That was a really, really long time. And at the time, I thought to myself, that's a really, really long time for things to go in my favor. That's a good thing. What I did not realize is that the buyers would be really, really thirsty and they'd want to close their options or assign this now before theta started to take hold and things like that. And the February 10th one, this had an expiration of July. And this is the one that I got assigned on. I made it on February 10th and I thought things were going well. I'd kind of put it in the back burner for now. I was like, okay. And it didn't get assigned until May. So we went through most of February, March, April. I held it at this particular option and wasn't able to really roll again until May. And the reason I wasn't able to roll was because of expiration. If I would have pulled expiration closer to me, I wouldn't have been able to buy to close. And guys, this was a big one. 851 I had to buy to close and I opened for 836 and it never dropped below that. This $100 play was one thing, but this one wasn't really that great. And I think in hindsight, I should have let this December roll. I should have waited and got a little bit closer to March. I should have been playing a little bit more towards expiration. And that's what I'm learning with my puts now. They can go bad now, but I'm really not going to try and roll unless I'm in that like 20-day window where theta really takes hold. I really, really don't want to roll until the week of expiration if I can help it. And by doing so, I really avoid these assignment issues and the reason that I got screwed, because I want to be able to manage the option. I want to be able to take control. When I gave this thing 6 months, I pretty much took that control out of my hands for 6 months. November 5th to the 12th, it was a week. 9th to the 19th, 10 days. Not that big of a deal. Even the 16th to the 3rd, 2 weeks. But that gap kept getting bigger and bigger, and I should have been a little bit more patient. I just saw the opportunities to keep lowering the strike. Like, look at this. I lowered that $500. And at the time, I was thinking more about the strike, thinking there's a chance Peloton might come back up to 50. Like in February 10th, let's see, I don't know where it was February 10th. Let's take a look. Yeah, February 10th, guys, it was still $37. And it was having a nice little pump. So I guarantee I thought to myself, wow, this really could get back up to 50. So I made this, this could get back up to 40. So I made that 40. I was $2 away. If I would have had a little bit more time, I thought to myself, all right, it's over. Peloton's going to dive up. The current share price is 38. Making this play for that far, Peloton's going to rebound. By July, it's going to be back to $50, and I'm going to win, and I'm going to put $836 in my pocket. Well, it turns out, yeah, I kept that whole entire $836, but I kept that entire $836 because I was assigned, and I had to pay $4,000 for the 100 shares. Now, adjusted basis is $4,000 minus the $127 in premium that I made from November to February. Still not that bad, still great. But now I'm bag holding, okay? Now I have 100 shares. Now what, right? My rule number one, and it's in the book, it's everywhere. Do not write covered calls below your cost basis. My cost basis was $40, all right? The share price at the time, $36.62. And guess what the premiums were? I could have went out 5 years. I could not get a premium for more than $1 out that far. So I was left with really two options. Number one, bag hold, sit on it. Hope that Peloton comes back. In a high quality stock, likelihood high. Peloton, I made a gamble. I got greedy. I still to this day, I don't think it's going to stick around for $10 the rest of the life. I think it would get bought out, if anything. Do I think it's going to be a $50 or $100 share price ever again? I would have to say no. But that doesn't mean that I can't make money. I bag held Wells Fargo at a worse percentage of cost basis to current share price. It was worse, and I got out. It took me 2 years, which I'm coming up on a year of this debacle, but I'm really confident. So that's rule number one, bag hold. Rule number two, you can, if you have an understanding of the Greeks and you have a strong understanding of how to roll and you have a very, very strong understanding and are able to manage this on a daily basis. I need to check in on this on a daily basis. You can gamble a little bit. I gambled on the way up. It'll probably burn me, but I just want to be full disclosure. My rule number one still is that you should not be writing calls above or below your basis. I'm doing it. These are the reasons I'm doing it. I just want to be transparent with you, okay? So let's take a look at how that's playing out so far. So here's the full story and this isn't even the full story, guys. I'll actually tell you the full story. The full story is I'm not just dealing with that. If we go to the history, I'm about to show you ones for that. I'll show you that. What I'm showing you now is just that first call. But you can see, guys, I've put in puts. I might average down. I guess that's another option. But you can see these are all calls and puts. These are all wheels that I'm still doing. So it's not like when you're bag holding, guys, you can't be like, oh, it's over. I'm just going to wait. I guess that is another thing I could do. If I didn't think that Peloton had a possibility of going to zero, which I do, I could write puts right now for $8. And then if I get assigned, that's a way to lower your basis too. But once again, I'd really only be doing that with strong companies, dividend blue chip companies that I say that you should be doing the wheel with. then I would average down by maybe placing more puts, because at that time the value would be better than that. But I'm not doing that with this. This is strictly one of those things where I am trying to get to break even, and then I'll probably get rid of Peloton and never talk about it ever again. And I'll show you how far I have to go to do that. But the same with the puts. I can roll if I need to. All of these strike prices are far below my basis. What I'm using right now is my delta. Okay, and if you don't know what delta is, pick up the book, or I have a video on just the Greeks. I'll put it somewhere. Delta's below 0.2, and I'm doing weeklies. So generally they're about 0.15. This brings a low premium, but gives me a good amount of risk to reward. And it also makes Peloton have to move a bunch to really screw me over. If I make that 0.1 delta at the strike, like these strikes are $14 when it was $7, double the price. Is it going to go up 100%? Not in a day. So if we had a 20% day and a 10%, I would just roll it. Okay. So that's kind of how you can do it to mitigate when you're bag holding. Make that delta really, really small. You just have to accept the fact that you're going to be taking really, really small premiums in comparison to what you once were. So I made a $14 strike to $5.27. Once again, I learned that, and I'm keeping my strikes pretty close. I got 16. What happened? It dove again. What happened? It shot up, and it got close to $14. So what I did, I bought to close for $40. I opened up for $52. So now instead of a $16 premium, now I got 16 plus 12. I increased the call, which, the goal one day is for that to be 40, right? I rolled it. What happened was I bought to close at $11. So that was good. Now I'm in that like 75%. I want to buy to close. And this trade netted me $41 to the good. All right. It started as a $16 trade. It ended up as 41 minus 24. You can do that math. It's really 16 plus 12, good for $18. Instead of 16, I got 18. I'm clear. All right. Then May 27th, then we started in June. And each one of these in whites did not require a roll. I was just able to buy to close them. All right. And with these calls, I'm waiting till Peloton has a green day. It's very up 5%, down 5%, up 5%. And you'll learn this about your stock. I wait every single time it has one of these weird, freaky days where it pumps. I write my call. The next day, it crashes and burns. And I've really only held on to these for like a day or two. All the ones I didn't roll, I really held for like a day or two. So it pumped. I wrote the strike of $13.50. I got $26. 2 days later, it crashed. I'm good for $21 profit. And I just continued this process, chipping away. 41, 21, 17. I'll take $9. I'm not stepping over $9 if I see it in the street. Boom, boom, boom. This one right here was the next time I had to roll. Now we can see the strikes are down around $10. Yikes. They were just in the news again. They're screwed. Whatever. July 19th, okay, a little jump from June. I was waiting for that green pump day. Just didn't come. I got $10 on here. I had to buy to close it for $79, which, net negative 69. Let's go. But I was able to open it for 96. So once again, a nice little roll for profit. And then I closed this a couple of days later for $26. Fantastic. I'll take it. This actually ended up being pretty much a break-even trade. I made $1 off it. It started as 10, but I got out alive. I got to hold on to my shares. This one was a big roll. Started $31. Then I had to net it down, but I rolled it for a credit from buy to close 67. Then I got back $92 of it. Then I had to buy for 137, but I got 60. Then I had to buy it back for 225, but then I got 240, and then it just flushed again, and I got $18. And the one I have currently open right now, which I'll show you in 2 shakes of a lamb's tail. Stick with me. I know this is a big one, but super valuable. If it is valuable, give the video a thumbs up, please. Leave me a comment. Do all that things, please. September 9th, I opened one for $14. It is currently still open. So I've made $189 since I was assigned. So I got the 127, the 189. Here is the current share price, 10.23. So right now we're approaching the strike. Tomorrow is Thursday, which is generally my roll day. My cost basis is 40. I own 100 shares. Here's my profit and loss. $2,977 currently down in this position. with the money that I've made back in premiums, I'm going to call that the adjusted P&L. Still pretty shitty. And my adjusted cost basis now is $36.84. And I'm just going to continue to do that until the adjusted basis reaches the share price. God only knows how long it's going to be. That's how long I'm going to do it, guys. If you want to learn more, you can pick up this or watch the playlist for free. I'll definitely update you. If you stick around, guys, I will show you all of these puts and everything that I have open. I'll make that video sometimes next week. Currently, this Peloton call, the market is closed, but the current share price at 10.26. I think right now I could have got 42%. I'll probably close this tomorrow, depending on what kind of day we have. If it flushes, with theta pretty much eating the value of this, I might get 50-60%, which I'm totally happy taking on a Thursday or Friday. And then, like I said, wait for it to pump, then sell it off, and then wait for it to flush, buy to close. Repeat, guys. Hope you get it. I'll throw the original debacle up here so you can see exactly how optimistic I was. Yikes. All right, guys, I'll catch you on the next video.